Hello students, today we are going to talk about budgetary control. So it's the topic that we need to discuss in cost management. So in cost management we discuss about budgetary control. In that there are two topics that we need to discuss. One we call the cash budget and the other one we call the flexible budget. So first let us try to discuss about the cash budget. And cash budget is an important topic from the point of examination. So there is no question paper without cash budget. So this particular topic you can expect for 14 marks. So now let us discuss about the budgetary control. Those days are gone, students, where every family used to make a budget. In the sense, next month income and expenditure will be planned in this month itself. In short, tomorrow's income and expenditure will be planned this month, today itself. So in that way, we are going to discuss about the budgetary control. So what is budget? It's a statement of estimated income and expenditure. Generally, you are aware that central government will file its budget statement in the parliament somewhere in the month of February. So there were two budgets, but now it's been merged. So we had finance budget and then we had the railway budget. So we used to plan in advance what is the estimated income tomorrow, what will be the estimated expenditure for tomorrow. So thereby we can able to find the gap. For example, in the coming month you estimate an income of 1,000, but expenditures are estimated to be 1,200. So there is a shortage of 200. So there is a gap of 200. So now you can able to plan for borrowing loan from bank to the extent of 200. So that is called budget. So budget is a predetermined, means in advance you determine what will be our income and what will be our expenditure. And if there is any gap, you take necessary action between the income and the expenditure. So this is a small introductory part or introductory explanation of cash budget, that is budgetary control. Now let us look into detail. So students, in budgetary control, as explained in the previous slide, you have two problems to be solved. One problem on flexible budget and other is problems on cash budget. So first let us try to solve problems on cash budget and then we will go into flexible budget. Before that, let us go to the introduction and meaning. Introduction is already discussed in the previous slide. Now you need to go for meaning. Budget. Budget is a predetermined statement which shows the planned income and expenditure for a definite future period. Budget is a predetermined statement. Statement means it's not an account, it's a table which has certain rows and columns where you enter details of expenditures and income, such as what type of expenditure, how much is the expenditure for what month, all details you write in a table. It's not an account, so we don't follow debit credit policy. So it's a statement, it's a table, it's a list that shows how much is our planned income and planned expenditure. That means according to our amount of income, quantum of income, you match your expenditures. So that you determined in advance. So tomorrow's income and expenditure, you try to calculate today. You determine today. So tomorrow's income and expenditure, you determine today. That is called budget. So budget is a predetermined. Predetermined means in advance you have determined what is the estimated income and what is the estimated expenditure for a future period. See, budget is a type of plan. So you don't do it for the past, you do it for the future. So taking the experience of past, you plan for the future. Either you may plan for next month, or you may plan for the next 3 months, or you may plan for the next 1 year. So you do the plan for the future. So budget is not for the present, the budget is for the future. Next, budgeting. The act of preparing or process of preparing a budget is known as budgeting. The act means the process of preparing. That means you get into action. You start doing the budget. So budget is a statement. It's a document that shows the planned income and expenditure. Doing that is called budgeting. Simple. A cook. A cook is a person who knows or who practice the profession of cooking. Okay. A cook is a person. So if that person starts lightening the stove and start cutting vegetables, and if he starts the work, it's called cooking. So there's a lot of difference between cook and a cooking. Cook is a person. Cooking is the activity of making the food. Like that, budget is a statement that shows estimated income and expenditure. So calculating, doing that work is called budgeting. So the act of preparing or the process of preparing the budget is known as budgeting. Next, we have budgetary control. So whenever you plan your expenditure for tomorrow, ensure that expenditure is within the planned amount. For example, I plan for a Mysore trip 1000 rupee. I should ensure that I should guarantee that my Mysore trip actual expenditure is less than 1000. It should not be more than 1000. So you should have some control in budget. Otherwise, the process of doing the budget is of no use. So it refers to the process of establishing of your budget, comparing actual with budget figures, analyzing the variance and taking remedial measures and revising the budget. See, it's a process step, students. First, prepare the budget. Second, compare the budgeted figures with actual figures. Third, find any difference, variance. Fourth, find out the reasons for the variance and take corrective measures. Take corrective actions. Based on this experience, you can revise the budget for another future period of time. So totally, this budgetary control has 5 steps. It refers to the process of establishing of a budget, that is budgeting. So you prepare the budget. Number 1. Comparing actual with budget figure. Number 2. So you compare the budgeted amount with actual amount. Number 3. Analyzing the variance. Variance means we call difference. Find the difference between budgeted figure and actual figure. Fourth, if there is any variance, you should take necessary actions. Remedial measures is nothing but necessary actions. And the fifth one, you need to revise the budget. What do you mean by revise the budget? Means you re-prepare the budget for the future. For example, students, the process of establishing the budget, I have estimated 1000 rupee expenditure. Number 2, I compare that 1000 with actual. Actual it is say 1200. Find the difference, analyze the variance, that is 200 is a difference. How that 200 extra has happened, take necessary actions. Based on this experience, prepare the budget for another future year. This is called budgetary control. So this completes the introduction and meaning of cash budget. Now students, let us solve one problem today in case of cash budget. A company is expecting to have 25,000 in cash on 1st April 2010, and it wants you to prepare a cash budget for 3 months, April to June 2010. The following information is supplied to you. So we have for the month of Feb, March, April, May, June. They have details of this particular budget. We have expenses, sales, wages, purchases. Other information. 25% of sales is in cash, and the period of credit allowed for credit sales is 1 month. Period of credit allowed by the suppliers is 2 months. Delay in payment of wages and expenditure is 1 month. Income tax 25,000 to be paid in June 2010. A company is expecting to have 25,000 in cash on 1st April 2010. That is, opening cash balance is 25,000 as on 1st April 2010. And it wants you to prepare a cash budget for 3 months, April to June 2010. So you should prepare a cash budget for 3 months, April, May, June. The following information is supplied to you. We have information from February to June, but we should prepare cash budget only for April to June. So February and March information will help us to prepare the cash budget. Expenses is a payment, sales is a income, that is called receipt, wages is a payment, purchases is a payment. So we have 3 payment and 1 income. Other information, 25% of sales is in cash. That means whatever the sales is, 25% is in cash. Then remaining 75,000 is in the form of credit. And the period of credit allowed for credit sales is 1 month. That is, 25% is cash. Then remaining 75% is credit. Example, you take February. February sales is 70,000. In that 25% is cash. That is 17,500. You can check in your calculator. 70,000, 25% is in cash. So 75,000 into 25%, you get 17,500. So this 17,500 will be received in the month of February itself. Then remaining 75%, 52,500 will be received in the month of March. So conclusion, students, February sales is 75,000. Divide the 70, sorry student, not 75, 70,000. February sales is 70,000. So 70,000 sales divide into 2 parts. 25%, 75%. 25% will be received in February. 75% will be received in March. Now come to March. March sales is 80,000. 25% will be received in March. 75% will be received in April. That is 80,000 into 75% is 60,000 will be received in April. So 80,000 into 25% will be received in March. Likewise, April 92,000 divide into 2 parts. 25% will be received in April. 75% will be received in May. Likewise, do for May, do for June. Period of credit allowed by supplier is 2 months. What is this 2 months? February purchase will be paid in April. March purchase will be paid in May. April 52,000 purchase will be paid in June. So you purchase this month, you will pay after 2 months. Delay in payment of wages and expenditure is 1 month. So February expense you will pay in March. March expense you pay in April. April expense you pay in May. May expense you pay in June. Like that you do for wages. February wages you pay in March. March wages you pay in April likewise. And another payment we have income tax 25,000 to be paid in June 2010. Now solution students. This is called calculation of sales actually. So let us try to calculate the sales. So students, what I've done in case of sales, February sales I've divided into 75% cash, sorry, 25% cash, 75% credit. March sales I've divided into two, 25% cash, 75% credit. That is total sales is 80,000. 80,000 into 25% is 20,000 cash. 80,000 into 75%, 60,000 is credit. So what I have done students, I have divided the total sales into cash sales and credit sales. So cash sales 17,500 will be received in February itself. 20,000 will be received in March itself. 23,000 will be received in April itself. 25,000 will be received in May itself, and 30,000 will be received in June itself. So cash sales, that month sales will be received in that month. But credit sales is not like that students. In case of credit sales, 52,500 will be received in the month of February. Sorry, February sales will be received in March. March sales will be received in April. Okay. I mean 52,500 will be received in March. 60,000 will be received in April. 69,000 will be received in May. 75,000 will be received in June. June will be received in July. So that we are not bothered. So credit sales 52,500 will be received in March. 60,000 will be received in April. And 69,000 will be received in May. And 75,000 will be received in June. And if you look at this students, we should prepare only for the month of April, May, June. So students, keep in mind, we should only look into the sales amount received in April and May, June. So what amount will you receive in the month of April? Listen carefully. You receive 23,000 plus March month 60,000. So totally you receive 23,000 and 60,000. Okay students. Similarly May you receive 25,000 and 69,000. Similarly June you receive 30,000 and 75,000. So kindly look here students. You receive 23,000 and 63,000. Okay. Next, for the month of May, you receive 25,000 and 69,000. Next, for the month of June, you receive 30,000 and 75,000. Hope you have understood now. So April, how much you receive? 83,000. May, how much you receive? 94,000. June, how much you receive? 1,05,000. So this is the final statement, students. Cash budget for 3 months ending 30th June 2010. You have to do month wise. Don't do all the 3 months together. First, let us look into April. Opening balance 25,000 given in the question. Introduction of the question, they are given 25,000 as opening balance of cash. As discussed in the previous slide, cash sales of April plus credit sales of March. Cash sales of April and credit sales of March. So March you receive in April, April you receive in May likewise. So total receipt 1,08,000 less payments, purchases 40,000, expenses 7,000, wages 8,000, income tax dash. You pay income tax only in the month of June. So purchases, February purchase you make in April, like that. That is lag in payment of purchase 2 months. You purchase now, you pay after 2 months. So February purchase you make in the month of April. March expense you pay in April. March wages you pay in April. Expenses and wages 1 month. So March you pay in April. Purchases 2 months. February you pay in April. So total payment is 55,000. So receipt 1,08,000 minus payment 55,000. You get a closing balance 53,000. So closing balance of April will be the opening balance of May. Next. So we have cash sales of May and credit sales of April. April credit sales you receive in May. Okay. So total all the three you get total receipt 1,47,000. Purchases March purchase you make in May. April expense you make payment in May. And April wages you make a payment in May. So total receipt is 66,000. Sorry, total payment is 66,000. So total closing balance you get 81,000. So closing balance of May will come to opening balance of June 81,000 plus cash sales of June plus credit sales of May. May sales you receive in June. So total receipt 1,86,000. Purchases April purchase you make in June. May expense you make in June. May wages you make in June. And additional information, you make a payment of income tax in June alone. So income tax is paid only in June. 25,000. So total payment 95,000. So 1,86,000 plus 95,000, you get 91,000. So these are the closing balance of 3 months. So you can plan your investment. So you have excess cash balance, so plus 53,000 plus 81,000 plus 91,000. So there's a surplus of cash. So you can make a plan for short-term investment in bank, or you can able to make your own expenditure plannings. Okay, students, kindly work out this. Any doubts, feel free to contact in the WhatsApp. Thank you.